today I want to talk about how to invest on a low budget, whatever your circumstances are. If you're just getting started out working, if you work somewhere that doesn't provide a retirement account, if you're a stay-at-home mom, whatever it is, I think we should all be investing. And I'm just going to talk about how you can do it if you have a low budget and don't think that investing is for you. So investing is essentially putting your money to work, purchasing assets that are expected to grow over time. And as a new investor, I'm definitely going to be encouraging you to be conservative with your choices of what you invest into, because our goal here is to make our money grow. So those assets that you can invest into could be individual stocks, ETFs, which are exchange traded funds, which is going to be a basket of stocks that you get through one investment choice, or a REIT, a real estate investment trust, which is a company that invests in income producing properties, a BDC, which is a business development company that invests in small and growing businesses. So I invest in all of these things, but starting out, most likely I would encourage you to choose an ETF. But as you grow, you might want to do all of the things that I mentioned. I invest into, for example, Amazon stock, the REIT, Realty Income, as well as the BDC, Main Street Capital, and ETFs like VTI, but that all developed over time. So whatever your budget, like I said, our goal is to make our money grow faster than it would in a savings account. And that's where the power of compound interest comes in. By investing your money, you're aiming to have a much higher return than you would definitely at your local bank or even in a high yield savings account. We're not talking about a 3% rate of return. We're talking about 10 or 20 or 30 over time. So let me start with a small example. You have $100, you invest it, you gain a 10% rate of return in that first year. Now you're going into your second year. You now have 110, and then you start to see that snowball effect, because now that 110 is going to grow. But let's come up with a plan and talk about some different scenarios on a much larger scale. So you're ready to start, but you don't have a lot of money. That is no problem, because it is 2024 and many platforms allow for fractional share investing. And let's talk about what that means. Let's start by taking a look at VTI, and this is the Vanguard Total Stock Market ETF. It's an investment choice that gives you exposure to the total US stock market over 3,600 stocks. So currently it is $302.45 per share, but you don't have to start off day one buying a full share. There are many brokerage companies, which we're going to touch on in this video, that offer the availability to you to buy a fraction of a share at as low as $5 to $10. And at Fidelity, it's even $1 that you can get started with your investing. So whether it's an ETF or individual stocks, you don't have to have that concern of, I can't invest in that because I can't afford it. You can afford it at your pace by going at the rate of 5 or 10 or even $1 a day if you have to. So now thinking back to my example of you invest $100 and it grows by 10%, and at the end of the year you have 110. VTI over the last 5 years is up over 80%. So from 2019 to 2023, there was a positive return on this investment of over 20% on each of the years, except for 2022. And you see here for the year 2022, the rate of return was about a negative 20%. That's why you have to get started investing and invest for the long term so that you can focus on your investing on those down years and then reap the rewards when it recovers. So now, still using VTI as an example, I've been investing into it for the last 116 weeks, $10 daily, $50 a week. Just letting it build and grow. I get a quarterly dividend, which I reinvest and have not tapped into it at all. And so far, I've invested $5,824, and my investment has grown by $1,878. or 32.25%. So $10 a day, if that doesn't fit into your budget, figure out what does and what you can stay consistent with without tapping into it. And that's why you also need an emergency fund, so that your investments can stay invested and you're not tapping into them for car repairs or anything else that comes up. So in my account that I've been investing $10 a day, I now have over 25 shares of this ETF. Just get started and pick those quality investments that you want in your portfolio, and don't let the price bother you, because you don't have to buy a full share. Whether it's $934 or $623 a share, if these are things that I'm interested in adding into my portfolio, I can do it, because I can stay consistent with whatever amount my budget allows for until I build up to my first share and keep on going. So as I was talking about at the beginning of the video, if you're not employed somewhere where there is an investment account where you're getting an employer match and you have to go about doing it yourself, let's talk a little bit about the steps that you can take to create a retirement account for yourself. And you may have multiple reasons that you want for investing, but I encourage you to prioritize having retirement as the first one, because we need to take care of our older selves, and we're not going to be able to work overtime and hustle and do the things that we might be doing today when we're 60 and 70 and 80 years old. So pick a brokerage account that suits your needs. If it's a retirement account, I personally do all of mine at Fidelity. You can contact them and talk to them at no cost. I'm sure they will have a conversation with you to give you some guidance on what type of IRA, what type of account to set up when it comes to retirement. Over there, I also do my investing for my daughter, so you can find out what suits you best, a 529 plan, a UTMA account, and I'll tag some videos or put them in the description where I give more information on what those things are, because as I said, I have accounts for different reasons. I have accounts for my early retirement, for my daughter, and for my true retirement age of over 59 and a half. And setting up an account with the brokerage company, whichever you choose that suits your particular needs, you're going to have to show your ID, your social security number, link it to a bank account in order to fund it. If you're doing an account for a child, you'll need a birth certificate. I'm just mentioning that you're going to have to have all of that information in order to create an account, because you are setting this up to have ownership in these companies, and those are part of the steps that it takes to be an investor. So getting started investing, I would suggest that you start off with an ETF like we were looking at. A VTI or SPLG is something else that could be a good start. This gives you exposure to the S&P 500. So this investment choice gives you exposure to the 500 top companies in the US, and it's weighted by market cap, basically the size of a company. So you're getting the highest exposure to those top companies in the US right now, which are Apple, Nvidia, Microsoft, Amazon, and Meta, which I'm sure we're all familiar with. And SPLG is $71 a share. So it's something that you might be able to fit into your budget to invest one share at a time. So I want to continue to stress, I want you to get started investing, but I want your investments to stay invested for the time period that you intend. And prioritize having a portion of it that is truly for retirement age. Now, how do we do that? We have to focus on figuring out your budget so that once the money is allocated for investing, it's put into these type of investments, it can stay there and build and grow. Even if it's $20 a month, get started. Don't let that hold you back, because you can invest that amount of money. Consistency is what matters, as well as the time that you are able to be in the market. So don't hold on to that 20 thinking I have to have a much larger amount to get started. That 20 could be growing at a much higher rate if you start to get it invested and leave it invested for year after year till the time comes that you are ready to start tapping into it. So just like we were looking at with VTI, this is Amazon stock. This is one of those top companies in the US. And looking at it, you can see the same thing occurred here in 2022. It was a very down year. But I just wanted to say again, when we are in those down years and you are in a quality investment or ETFs, we can't worry about the market ups and downs. We just have to stay consistent and think about the long term, because the market will recover, and we could have had that year as an opportunity to build into our investments at a lower price point. So today we have the option of fractional shares. We have features in our investment apps that we can set up to fund our account and make our investments for us automatically. Even if it is a small amount, you don't have to wait. It's not complicated. For example, I have money scheduled to get deposited into my Webull account on a weekly basis, and then a $5 daily investment scheduled, and it does it automatically for me at 1:30 p.m. Eastern Standard Time. It can really be that easy. So don't think that you have to wait to get started investing. As long as you have an emergency account, as long as you feel that you are in a place where your investments can stay invested, get started on your journey today. Set up the accounts. Starting with a small amount is better than not starting at all. It's all about making those smart decisions and staying consistent. So I hope you found this video helpful. Check out some of my other videos on investing into ETFs and blue chip stocks. Thanks for checking out my video and being on this journey with me. Drop me any questions that you have. Subscribe to the channel. Hit that like and notification bell. Check out my referral links for Webull and MooMoo. They'll be in the description and pinned in the comments. Thanks for watching. Okay, bye.